All right, this week we got a lot in store. But first things first, let's take care of business. If you're new to our channel, we are Women in Linux. I am Tam. D is in the background. We are discussing this week with Tech Stocks and Jobs, episode 34, where we talk about technology, jobs, IPOs, ETFs, anything regarding the stock market, but more so the technology stack behind some of those IPOs in some of the stock. For example, like a BlackRock or an IPO investment, which we're going to talk about today with GitLab. Like, what's their technology stack? What are they hiring for? And should you be making an investment into them? And understanding like how long some of these companies have been around. So, the proof is in the pudding already because they've been around 10 years. And also, if you're new to Women in Linux, you should check out our website, womeninlinux.org, where you can find more information about us. But really, what you're finding about us is how to connect, right? If you want to connect with us, you hit connect, drop in your email address, and join our Slack group where we have tons and tons of information where people make connections and so forth. I was talking to one of our members last night, and she was stating had she not joined Women in Linux, she would not have discovered the scholarship and been in the SANS.org scholarship. Congratulations to her, and also congratulations to the fact that she's actually completed one of the courses and got a certificate in that course. So again, if you want to know where else to find us, you really find us in Slack. All right. And also don't be afraid to shop and get merchandise where you can, if you hit all products, you'll see all the products that we have. We just got this in, actually. It's right here. We actually have one here, 5th anniversary. Pretty durable, pretty thick. I like it. Great for just, this is great. You wonder where you would use this at? Conferences. Like, this is great for conference, hallway track, have your getting some notes, your business card, collecting business cards while you're at the conference. That's where you use something like that, or even at a concert. But you can't take it to an NFL game or any other public events because they need to be a clear case. Maybe we'll make one for you. All right. Also on here, we do have stuff for kids, for those that have kids and just want to welcome an infant in, or stickers. You have a little beanie, great for conferences as well too. Winter is coming up. Winter is coming, so that'll be great for that. And there's 3 pages, and I'm not going to go through those pages. All right. And last but not least, if you ever want to know how you can donate or shop with us, you can donate with your time. You can donate with giving back in terms of mentorship and so forth, or connecting with others. But you can also donate with on our donate page. 100% of it goes to us. It does not. It's not a percentage that goes to PayPal. I know some people have problems with PayPal. Another way that you can also support us is you can sign up for a one-on-one with Calendly. If you would like to have a one-on-one about career advancement, career assessment, a one-on-one in terms of uh, uh, how to get ahead, what should be your focus, where do you see things going, and so forth. For you, tailored towards you. And last but not least, if you're looking for places to actually study up on, you can hit up IT Pro TV. D can drop the link for IT Pro TV in terms of like, hey, you get 30% off. I have a actual membership over at IT Pro TV, where I go in and depends on how you learn, right? Some people need guided videos, just voiceovers, and then some people need to see a human and interact. This is more of a human interaction with their stuff. It's more like, hey, somebody is delivering the content, they're recording, and so forth. Don't forget to use the promo code Women in Linux for this particular link. And D has the link there, and you can type in the promo code. If you sign up, you get 30% off, right? So I like them, but I like a lot of things, right? All right. So let's get into it. Let me pull up my notes. I had my notes in front of me, and then they went away. Here they go, right here. Let me pull this over so I can read, and we can go from there. And let me give shout outs to those that are in the chat right now. I Zephyr Major, how you doing? Bobby, let me see, Bobby McShaw, DOT Biz. Oh, that's your website. .biz. Got you. What's up, Fuchsia Jones? I ain't seen you in a minute. How you doing? How you been? All right, so let's get into it because we got a lot to go over, and I'm gonna tell you now before I get started. We do have a 2 o'clock show, and that 2 o'clock show is going to be nothing but a ton of information. So get your pen, your pad, and your paper. Right, get your pen and pad and paper all day. I'm just gonna tell you that, and we're gonna start it like that. All right. So let's start off with this right here. Hold on, let me get it open. Hold on, gotta open it up. Give me a minute. It's almost there. All right, cool. All right, so here we go. Trading stocks. See, that's what I titled. So, all right, so here, these are things I just thought were interesting. I want to talk about this. A math teacher earned $114,000 in 2020 trading stocks with a low risk strategy. And in this article, it gives the 4 pillars of his main method. I thought was just interesting, something that you may want to check out for this when it comes to trading stocks. Let me get down here to uh, see his strategy. You see, and eventually blah 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 blah. Receive returns. Receives a premiums for contracts. So basically, he was selling his covered calls. So if you ever looked at like uh what is his name? The stock, well, I forget the guy name now. Anyway, the minimum they tell you when you're buying your stocks, right, is to buy at least 100 of them, right? Really 125, so you can do what they call a covered call, or basically you're selling your stock, and then somebody makes a bet against that stock, right? So at least there's just other ways to earn money, right? I'll say some of the stocks are expensive, like when you start getting into stocks that are like $400 a share or something like that. So yeah, that might be a little hard to do. But a stock that may be like $7, you can buy 100 shares of that, or 125 shares of that. And so that's basically how he did his strategy. But what I have been seeing is that's how most people are doing this long term, instead of just buying 1, 2, 3, 4, and 5, or dollar cost averaging, where you might buy a slice, or like we say, when you don't pay all your bills on time, you put something on it. Instead of putting something on it, I've seen most people just go flat out and just buy so they can have a covered call, right? So just one aspect of what he did, right? Another one I wanted to bring up was this here: how to become an accredited investor, right? So they actually just changed the rules for you to become an accredited investor. It used to be, well, let me say what it is now. You have to have a you have to have made 200,000 for the last 2 years, and then before, I think it was 200,000 for the current year and the last 2 years. I think that's what it was. And then if not, you had to have a net worth of $1 million to become an accredited investor. One reason why I'm always telling you all to make the maximum amount of money as you can, that I always tell you, at least if you're gonna get into tech, at least start at 150 at a minimum, right? But I'm also telling you this so you can become that accredited investor, where you can get into stuff pre-IPO. You can do that now with some of the platforms out there, but some things that never make the platform that you can get an involvement in. So let's look at this. Have you ever wanted to invest in a hedge fund, or participate in a crowd funded real estate investment opportunity? right? So to take advantage of these and many alternative investments, you probably need to have an SEC definition of an accredited investor, right? So you could get into like a crowdfunded investment. So like a platform like Fundrise or something like that. Yeah, you can get into it and then start. I think they at a minimum you have to put in 1,500 a month with them as an investor. But say you wanted to create a hedge fund, right? Say you wanted your family to have a hedge fund or something like that. That's something totally different. So now you want to be that accredited investor, right? So by definition, and I hope this is coming in. Let me blow it up some. By definition, an accredited investor is an individual or entity with a certain level of financial sophistication. Investors who meet the SEC definition of an accredited investor have access to certain investment opportunities that aren't available to the general public, such as hedge funds or private equity. I've posted in Slack about about the family office, how to create private equity fund, how to create an investment fund. If you are not part of our Creating Wealth channel, you need to get in there because I post a lot of information in there about creating your wealth. All right. So here's where they talk about that accredited investor, right? To qualify as an accredited investor as an individual, at least $1 million in net worth, excluding your primary residence. So your house doesn't count. uh, uh, or they may have an income of 200,000, or jointly with you and your spouse 300,000 for the past 2 consecutive years, with an expectation of the same in the current year. And then they also say for investors, for example, a trust with assets of 5 million or more would qualify, right? So what your assets are, so your ability to invest in real estate and so forth. So this is why you make your money in tech and then go invest somewhere else. But at the same token, everybody who comes in and make the, you make your you get your sign on bonus. Don't take your sign on bonus and go splurge and spend it somewhere. Go put it into an ETF for 5 years and let that money grow, and then go splurge on that. I know it's a long time to wait, but at least if you're active with a good ETF, which we're gonna get into here shortly, you'll see what I'm talking about. You can make your money, right? So that's just an accredited investor. I don't want to beat that up too much, right? So this is another one that I found interesting when we're talking here on tech stocks and jobs. Wall Street, and I talked about this last week with Fidelity, right? Fidelity is hiring 9,000 people because they're trying to keep up with the retail investors. Over the past year, the platforms like Robinhood, M1 Finance, Webull saw a growth of 10 million people making investments. And I got that from Bloomberg, and I got that also from Business Insider. So 10 million people. So you imagine that everybody's not going to use the same platform, right? So you got to think about how much they're making, right? Or how many people they need to maintain that app, to maintain that infrastructure, to maintain security, to do the marketing, make changes to the app and to the platform, what that looks like, agile, when we're thinking about this. But what I found interesting about this was Wall Street influencers are making 500,000 and they're topping bankers. All right. So Wall Street influencers, right? So now they get into what is a Wall Street influencer. So this person was a 25-year-old TikToker from Tennessee, was posting videos describing how to retire a millionaire by using the platform. His name was Austin Hankwitz. He's managed to land at least one of the hottest gigs as a Fin influencer, FIN influencer. Look, FIN influencer. Look that up. All right. Oh, here we are. So you probably could get a job at some of these companies doing stuff like this, or you could do like he did on TikTok, right? Fin influencer, right? It's like we were like, where's this increased activity coming from? And so they were able to find the source, and it was something they were not sponsoring. and they had no clue. So creating jobs, right? Created a job, right? All right. And also, if you like the content, hit the like button, right? All right. So it also talks about the teens and 20 somethings who steer online conversation about life hacks, beauty products, Hollywood blockbusters, you name it, anything. Joan, you listening? Anything when it comes to being an influencer, right? And guiding. So, and it says making the best more accessible to millennials and Gen Zers, right? So those are the ones they're looking at. So Fin influencer. Let me see. In the green, see, was toiling with an old-fashioned finance, working on mergers and acquisitions for a haircut company, making TikTok videos as a side hustle. Now he's a hot commodity to startups and finance companies eager to reach 495 followers. So what they're talking about there is, remember when I was talking about all these fintech companies that are on the rise? Well, if I'm a fintech company, I want you to start using my product. Number one, the more I get you to use my product, the better I can make it, right? The more I can find flaws with it. The more I can find flaws with it, the better I can make it. The more advertising I can do of things we fix, new features that we added, uh, betting, cutting out the actual, or beating the my actual, I don't want to call them enemies, but other people who are in the space, right? And then also now the word gets out where I'm not just advertising on commercials, it is now word of mouth for that. So that's what you're looking for, and that's what you can be, right? Giving, one big thing I see is like being able to give a review of a product, especially a new product, especially someone, say you have a lot of people that follow you, you do a review of a product, you send it over to somebody like who works at that company, you put it out on social media, you do your broadcasting, right? Especially for something somebody may not never heard of, or may have never used, and you give your review. Hey, after a month I've used this, blah blah blah. That's that influencer one, right? So he charges anywhere from $4,500 to $8,000 per post on his TikTok page. He said Fundrise, just talked about it, a real estate investment platform, pays him every month to post 2 videos on his TikTok page, and also offers him a monthly bonus as much as $2,000 based on how many people he pushes to the platform. BlockFi, a trading platform, cryptocurrency trading platform, offers him $25 per user pushed to the platform through his unique code. Stock trading app public.com offered him a monthly retainer and company equity for a contract that includes replacing Yahoo Finance stock charts on his videos with theirs. So again, we're talking about being that fin influencer, or the influencer, what that looks like, what you could charge, how much money can you make. I mean, if you're putting him on a retainer every month and he's averaging anywhere from $4,500 to $8,000 a post, let's say he do 5 posts a day. Let's say he averaged, what's that? Let's do 12,000, 12, let's divide 12,000. So let's say he averaged $6,000 a day. And so 30 days in a month, so 6,000 times 30. I mean, you do the math there. He could take a day off if he wanted to. You don't have to work every day, right? It's also said he's funded well over 240 accounts on Fundrise, 1653 for public, and tens of thousands for betterment. His unique BlockFi code brought in 268,000 of crypto purchases in a month. He's currently representing 6 companies. See, you don't have to represent just one company. Don't, again, these NDAs, look at those NDAs and see what they're saying before you sign them, right? All right, because he's representing 6 companies. Get you a lawyer, right? Um, so he's representing 6 companies, and for anywhere between $4 to $17 per month, super fans can subscribe to his Patreon channel, where he offers deeper investing and financial analysis. Hankwitz currently has about 1,100 subscribers. He's doing that with 1,100 subscribers. All right. So just Just thinking about it, he makes more than 500,000. I'm like, you do the math on 6,000 times 12. That's more than 500,000. All right, somebody give me 6 times 12, 72, and 72 times 12. Somebody give me 72 times 12. Somebody give me that number. He also said he's built a portfolio of about 1.3 million since March of 2020. We are in August of, I mean, we're in September of 2018. This article came out so yesterday on the 17th. Let's say they held it for a month. So, give or take there, to put this article out. In part with equity received in brands he represents. And they break down here the mobile participation. I'll go into that in a minute. Social media can be a lucrative business for big follower accounts, so forth. Creators can get paid anywhere from $100 to $1,500 for a swipe advertisement on their Instagram stories, 1,000 to 10,000 for a single post on their feed, according to figures. Brian Hanley, the CEO of Bullish Studio. Bullish Studio. Let's do. I like when they got links. The talent agency for influencers. It's a talent agency for influencers. Bullish Studio. All right, so check them out for those that don't want to be influencers or want to get into it. Check them out. On TikTok, the cost of one post can range from 2,500 to 20,000, depending on the video virality and the creator's follower account. All right, so 2,500 to 2,000, 20,000 on TikTok. What you say? 864. That's 864,000. Yeah. So yeah, there we go. Right. So hey, and he's got 1.3 million in his portfolio. He's already doing investment. He's 25. So you think with compound interest with that 1.3 million, where he's gonna be at by the time he hits, let's go with 45. Let's just go with 20 years, what that would look like. Um, let's when we can do that too. Let me hold on. I'm just nosy here. Schwab portfolio. What is it? Robo advisor. I went through. I did this before with you all. Let's hop down here to automated. It's an automated investing tool, and it'll go over your risk and so forth, like what you're willing to do, what you're not willing to do. Let's continue. Let's say I don't want to do any withdrawals. I showed you all this before. Let's say build long-term wealth. We say for him, he's extensive. I think the thrill of investing. All right. You say yes. We'll go here. Bought more. Confident to make decisions and don't look back. All right. We go here. Let's say he's got 1.3 million in investments, right? Is that right? One more zero. Go here. And then there. Oh, take off 1 0. All right, so here. Yeah, okay, okay. All right. Let's say he contribute monthly. We said he's got 72. So let's go with the 72,000. Let's say you do 72,000 monthly. And let's do this over 20 years instead of that. Okay, on an average, if he did this, right? If he went in the robo advisor and did 1.3 million, and let's say he put in 72,000 a month, let's say he maintained that, right? For 20 years. In 20 years, and he's 25, at 45, he'll have $40 million in his account on an average. That's on an average. If you look at this tool, the tool just says at your worst, you'll be below 40 million. You'll be below 35 million. If it's really, really smoking and doing well, you'll be up here, which is above 40 million. So on average, right? So I like to use this tool just to see, like, hey, what I could do, where I can be. Say if you just took a lump sum, like but at 72,000 a month, he could be at that rate. And let's say he don't do 72,000. Okay, let's just say he does. Let's say he does. Let's say he does. Let's do 20,000 a month. Oh, let's don't change that. 20. Right. So if he did 20,000 a month, be realistic, right? He'd still be at 14 million. All right. So the question is, where do we stand with all of this, right? Where do we stand with all of this? All right. Let me know if this made sense to you. Drop a one in the comments. And let me know if that made sense to you. Were you excited? What site was that? This is I showed this on Tech Stocks and Jobs before. It's Schwab Intelligent Portfolios. And if you click getting started, hit continue, you can set it up where you can look, say you get a lump sum of money, and this is what I talk about when you get that lump sum of money from your sign-on bonus, right? Try to maximize that sign-on bonus as much as possible, right? If they offer you 5, ask for 10. If they offer you 10, ask for 20. If they offer you 20, ask for 40. You want to maximize that as much as possible. If they offer you 5, you're not getting 5 because there's taxes on that 5. So you need more than 5 to get the actual 5, right? So if you could take the 5 and put it in here, or an actual 10 and put it in here to start out with, right? And just do an investment and be okay, right? Say in 5 years, and we could do something. I could show you something about that, like within 5 years. Let me get to it again. So this is 5,000. Let's say, how much would you be comfortable with a year from now, and how much do you want to contribute every month? Let's say you maxed out your 401k, or you don't max out your 401k. Maybe you only do a little small portion into your 401k because your return on investment inside your ETF, this is basically an ETF portfolio, is returning way more than that. Let's say that you do it at 1,000, and let's say you do it for 20 years with a $5,000 initial investment and $1,000 a month over 25 years, you'll be at $756,000, right? So let's say you don't do that. Let's say you only put in $500 every month. For the next 20 years, you'll be at 389, right? That's on average. There is a better run, as you can see here on this graph. There is a better, and it can be worse, but that's on average. So in 20 years, you can have that, right? I mean, in 25 years, you can have that. But I mean, your initial investment may be higher. You may do reinvestments. You may do some things with it. But if you just think about that, you just putting that $500 away every single month into that account and just let it roll and let it do its thing. And here's the other thing: you don't have to just let it sit there. If you were looking back at the site, when I first started, you can actually do what they call, you want to do a withdrawal, right? Say you want to have it for supplemental income. And I think there's a different initial investment here. I think the one that I first showed you is 5,000. I think this one is it may be 20,000, I think, for initial investment, but you get that in the sign-on bonus, right? So let's look at this. Baltimore, confident, don't look back. I plan to enroll, let's say 40,000. Say you get a sign-on bonus for 40,000. I need withdrawal to last for, I don't know, 40 years. All right. And so this one takes you through, how do you want to break this down? Do you want to select this brokerage to individual or revocable living trust, retirement, small business retirement? Remember, we talk about creating your small business where you can have a SEP IRA or a simple IRA. And so you could go through here if you want to and break this down. I'm not going to spend time on it. I just wanted to show you what your options are. I think Fidelity probably has the same setup as well too. All right. All right. So next one up is my favorite. I don't know if you all saw this. My favorite, going public, which is GitLab. GitLab, the coding platform, paperwork, US IPO. They talk about going public here. Um, uh, coding uh, coding platform. GitLab reveals surge in growth on US IPO filing. They did not disclose the terms on the offering. The company was last valued at $6 billion after a secondary share sale in January. And this is from the startup data platform PitchBook. PitchBook. So you need to go, when you see these things, you need to go look these up. PitchBook, right? What is PitchBook doing? How are they gathering their data? That's another place that you should be looking at for jobs. How are they gathering their data? How they're securing their data as well too. We'll go check them out here in a minute. Um, and then they go on to say, according to the filing, uh, GitLab generated 108 million for in revenue for the 6 months ended in July 31st, an increase of 69% year over year. However, it incurred a net loss of 69 million in the same period compared to 43 million the year before. All right, and if you GitLab is similar to GitHub. If you're not familiar with GitLab, a lot of people use GitLab. I use GitLab. I use GitLab every day. All right, so just a FYI on that. All right, so GitLab, be on the lookout for them. And I said we're gonna check out PitchBook, and we should check out GitLab too. They have jobs. The only thing I don't like about GitLab, they pay you based on where you live at, not based on your experience. All right, so let's go down here to PitchBook. This is their website. Let's drop down here to careers. I always go down to the bottom of the page. They usually have a little bit more information here. So we go right here, careers. You can also be a partner with them as well too. So let's go search jobs. Let's go location. Let's see. They got Seattle, San Francisco, New York. Let's go by department. Let's go with information technology. This got one as a sysadmin in Seattle. Let's go back up. Let's go engineering. And under engineering, you got an engineering manager for machine learning, an SRE, a director of software architecture, a director of engineering for DevOps based out of Seattle. Let's blow this up some. Okay, owns engineering operation strategies, evangelizes, organizes PitchBook DevOps culture, SDLC software development lifecycle, leads site reliability engineering, including recoverability, which is DR failover, and regionality, SLOs, SLIs. If you're not familiar with SRE, go to sre.google. It's sre.google.com, or it's just sre.google. I think it's sre.google. And this is where SREs come out of. We talked about this before, where site reliability is going in terms of numbers, in terms of jobs, in terms of salary, right? Back over here, understanding GitOps. When they talk about GitOps, check out Weaveworks for GitOps. That's where you'll start seeing this. Also, check out on YouTube. Check out how Chick-fil-A uses GitOps. There's a Kubernetes cluster at every register at a Chick-fil-A. So just a FYI. So lead developer experience, DevX, manages the cloud budget, understanding how to cut costs or when to spend. Describe technical context, learns constantly, that constant learner, frameworks, libraries, commercial and open pros and cons, trade-offs. 7 years of DevOps, senior DevOps developer experience, SRE, so forth. 3 years of leadership, extensive understanding of Docker, Kubernetes. That's why I want us to get past the ARC CSA. Strong skills in DevOps, infrastructure as code, CI/CD pipelines, Terraform, Puppet, Chef, Ansible, GitHub. Everything that I talk about, this is these are your foundational. These are foundational skills right here. These are foundational skills. You add on Kubernetes, you can, depending on where you're going, you might as well say that's part of your foundation now, right? These right here are foundational skills. These right here you learn on the job, right? Strong skill system admin, hold at least one professional certification in AWS or GCP DevOps engineer architect, successfully built and executed multi-year technical initiative, strong metrics focus. Everybody want metrics and dashboards. Excellent communication, written and verbal. You're a polished presenter. All right. So that's on PitchBook, right? GitLab, we'll go check that out because we talked about them. They also actually have their pay scale if you want to know more about that. Their pay, excuse me, their pay calculator. Here it is right here. They go over how they calculate your actual pay, and they have everything in here: base plus variable, total target cash, and so forth. So they break all that down here for you, so you can check them out. But in the meantime, in between time, let's check out their careers. Um, right, jobs. See openings. All departments, which is fine. We can go engineering. So you can see I won't go through everything because we got so much more to do. But here you go. The list goes on. This and FYI, GitLab is always a remote company. They're remote first, right? So check them out. All right. So next one up. Oh yeah. Let me see what I had. I had this information on from TechCrunch. I want to see what they had to say about their filing. See, GitLab competes with GitHub, which Microsoft purchased for 7.5 billion in 2018. See, valuation of 7.5 billion per PitchBook data. Um, and they just go into the S1 filing. I don't want to do all that. All right, so this one I found funny. All right, let me scroll up on this one so I can bring it over so I don't have so you can see what I'm reading. The FTC the FTC is their they are investigating McDonald's, right? The Federal Trade Commission is investigating McDonald's for their ice cream machines, right? For their ice cream machines. The FTC is looking into it as a right to repair issue. McDonald's franchises may be restricted from repairing the machines themselves. The FTC has recently ramped up its enforcement of the rules about illegal repair restrictions, arguing that some existing warranty or repair restrictions may violate antitrust laws. Maybe when you go through the line again, you can get a McFlurry. This is no order because for years advocates have been pushing the right to repair rules that will require manufacturers of things like phones, cars, washing machines, medical devices, farm equipment to publicly post their product documentation and forbid repair restrictions. Consumers could fix the product themselves or go to a third party shop rather than rely on the official authorized repair centers, which are almost always most expensive options. Although dozens of states have introduced the right to repair bill, few have succeeded. But a recent executive order and a recent policy statement from the FTC may signal a new era of right to repair issues. Uppercase G. This sounds like something you would be interested in, right? Sound like something you would be interested in. So I wanted to read that for you. Make sure you get your McFlurry next time. And you saw below what I was going with. Next one was Goldman and Green Sky. Goldman and Green Sky. All right, the shares for Goldman and Green Sky were up 50%. So let's go to Yahoo Finance. And you think what I got right now is nice? You wait till 2 o'clock show, man. It's gonna be good. GKSY. So GK, no, GSKY. Green Sky. All right, Green Sky. Why is that important? The share shot up 50% after an online lender, Goldman Sachs, agreed. I guess agree. I guess they purchased them for 2.24 billion in a transaction that bolsters Wall Street Bank's presence on Main Street. Green Sky stockholders would get point zero 0.03, I guess, zero point zero 0.03 share of Goldman stock for each GK G Sky share they hold. Green Sky works with retail investors, retailers like, not investor, but retailers like Home Depot and independent doctors and dentists to arrange loans for such things as cosmetic or cosmetic surgery or construction products. It has a network of 10,000 merchants. This business will complement Goldman Markets consumer banking platform. So yeah, so they're purchasing them for $2.24 billion. They got purchased, right? It's called Green Sky. So let's go check out Green Sky. Right. Try not to click. Yeah. Goldman Sachs is acquiring the buy now, pay later fintech. Be a fin influencer. Uh, here you go. All right. Let's go. Let's see if we can find Green Sky. Did I pass it? Right here, Green Sky right there. All right, let's go check out their jobs. Let me see. No up and down. All right. This doesn't look like that. FAQs. I don't like that link. It's just Green Sky Online. Just look at Green Sky. Let's go here. There we go. That's better. Careers. All right. Let's look at information technology. I'm just gonna search every place they got. So senior, they're out of Georgia. Okay. Senior software engineer, Salesforce administrator, senior database administrator, tier 2 help desk, full stack developer, Genesis cloud engineer. Let's go there. Let's look at that. Green Sky seeks to recruit a Genesis cloud engineer to assist in design and delivery of new features, functionality of Green Sky IVR and ACD platforms. What is a Genesis cloud engineer? Is that a particular cloud? Never heard of them. See, looks like Genesis referral, Genesis Pure Cloud. Whose platform is this right here? Genesis CX Cloud right here. Future-proof your contact center. Compose a customer experience, a symphony. Let's go look at their products. Capability, contact center, digital, AI and automation, workforce engagement, integration and apps, help desk. This is something you're going to learn on the job unless you come to this site. Deliver a superior customer. Okay, yeah, you would have to learn this on site. So it's probably the same setup, but look like this is really tailored towards certain companies. I would be interested to know who they work with, right? Who are they in their partner channel. So you become a partner and check out who's in their partner channel is what I would want to know. Let's see, find a partner. This is Genesis Cloud. So here you can find a partner. So here's who they have across the US. Here's over what they have everywhere else here with those dots. And so you can look here, cognizant. And so 9 times out of 10, some of these companies are only the go-to. They're a gold tier. specialization in pure cloud. All right, let me see. Let me go back here. Pure cloud, inbound, pure connect, and so forth. So just be on. This is just a FYI here. When I'm looking at these partnerships, right? So then for me, I have to go a little bit further, and then I would just type in pure cloud here just to see what I'm pulling back. Yep. So we saw Cognizance. We see um, Genesis, Pure Cloud, Circus Lab, com- Coverance Insurance, Sky Systems, Voice over IP, Melody Pharmacy, Soul Tech, um, DeFi Solutions, AI software engineer, backing in the Sky System. So that's again, I'm just going down what they're giving me, going down the rabbit hole of well, who uses it, who's a partner with it, what are they using it for, who are they with, and so then this gives you an idea of what type of companies are actually using it. We see banking, financial, AI centered around this. So Goldman Sachs, so fintech is a part of this. So I'll be looking at that for my if I'm interested in AI and cloud and security, I would be looking at that platform as well too. Really niche. It's really niche because I've never heard of them. Really niche, but again, I'm not in the fintech world, so it may be big in the fintech world, right? All right. So we went down the rabbit hole. All right. So the next one up, I want to show this. I don't want to run it to 1 o'clock, but I really wanted to show you all this. This is the ETF I wanted to show. All right. So I was playing around with this morning. Um, and if you go on performance for this, and I went by 5 years. So remember I was showing you that robo advisor and you put in 20,000 and you grow and somebody put in 500 or 10,000 or whatever it is a month. But here are some ETFs that are returning over 5 years, 152 point one, I mean 0.11%. XLG 144 MOAT. And you can go look all these up. I'm just giving you this because I saw it. I'm just looking at what it returns in 5 years. What are we returning in a year? It's fine, but we're talking long term investing. We want to go out 5 years, and then this is what that looks like, right? And it all goes all the way down to let's see. I mean, I get this page goes forever, right? For these, so I'll do a deeper dive into these come next week. Make sure y'all hold me accountable to that. Like Tameika, don't forget to go over these investments right here that are returning 152.11%, 140 over 5 years, right? So say you had that 20,000, right? And you took it and you put it in here for a year, you're getting 70% of your money back. So I mean that ain't bad, for a return. And then you could take that return and go do something else with that return, right? So 70,000 and 70. Say you get a bonus, sign on bonus for 20,000, and you put it up, and you get 70% of your money back. You just take that, the 70% that you make and go invest somewhere else. But if you're in 5 years, you got that 152. That's a little different. All right. Let me see. I talked about the accredited investor. Oh, this one I wanted to bring up. I think this is the same one. Hold on. Nope, it's not. I can't get it, but that's okay. This one here is about Forbes. I didn't even know they weren't publicly traded, but Forbes is going public, right? Forbes is going public in a SPAC. And we can go look that up. Forbes. Forbes. I think I talked about it earlier this year. Right here. All right, they're going in a SPAC. A long Forbes, long-standing media publication, announced Thursday is planning to go public via a merger. The company will merge with Magnum Opus Acquisition. All right, the long-standing media publication announced Thursday is planning to go public. It's expected to be value and implied pro forma enterprise value of 630 million net of tax benefits. Forbes will trade on the New York Stock Exchange under the symbol FRBS. FRBS is the symbol. And then they go on to talk about in here, BuzzFeed. We saw them go public. Vox, and all we saw these go public. So maybe you start a news channel, right, where you're reporting and being an influencer on your news channel, right? So this is what we're talking about, like being that influencer, but understanding the product, right? You need to understand the product that you're actually I don't want to say pushing because it sounds like a drug deal, but the product you're promoting is what you want to look at. All right. So I also brought up this one. I might have should have held this one on the next one, but that's okay. Um, Ethereum competitor announces 230 million token sale after surging 80% this week, right? So the Ethereum competitor has surged nearly 60%, hitting an all-time high this week, even while the majority of the other crypto projects have moved sideways on the chart, on the pricing chart. If they're moving sideways, um, just from my experience, Apple was trading sideways for a long time, and then it broke out and then hadn't looked back, right? A smart contract platform, Avalanche AVX, is trading at 65.02 at the time of writing and has achieved an all-time high of 68 at one point on Thursday. This is according to CoinGecko. And so in this article, they just go in to talk a little bit more about that. I want to make sure I brought that up to you. That's the accredited investor. We looked at the ETF on the 5-year return. All right, what companies IPO this or on the IPO watch list? People that were setting up their IPOs in the market. I'm just gonna cut and paste this and put this into a text edit right quick so you can have this and uh, so you know what I'm talking about. So new document here, cut and paste. All right, so let me make this bigger. Let's move this to size 64. Maybe too big. 48. That's okay. All right. Super huge. You should be able to see that. I'll make it a little smaller so you're not blinded. All right, cool. All right, so IPOs for that got set up this week. Sport Radar, SARD, Dutch Bros. Well, you can look these up after which is being under Bros. Definitive Healthcare Corp, which is DH. ThoughtWorks. You heard me talk about ThoughtWorks before. ThoughtWork Holdings, TWKS. On Holdings, on Procept, Bio Robotics, PRCT. Actually, why that's interesting to me is I was just on Clubhouse this week talking to uh, uh, a friend of mine, and he was talking about he was making software that is going to eliminate the couriers. So just a FYI on that, using AI and so forth. Forge Rock, all set to debut. So they're all this is coming. Software consulting firm ThoughtWorks Holding could trade with the highest market cap with a Simmons-backed company aiming for a valuation of $6 billion. I told you, I know you heard of ThoughtWorks. I talk about them all the time. Go check out ThoughtWorks and go check out their jobs and their thought leadership, in which because a lot of companies go offer them for thought leadership. Um, for IPO lockup periods to expire or low, Joel, let's see. They're just talking about lockup periods here, Finch Therapeutics, so forth and so on. So when you get down here into these therapeutic companies, man, they so tight lipped with people. It usually be like 8 people, and it'll be an evaluation of 10 billion. Like you're like, man, how you get in on that? All right. So I just wanted to point this out, bring this over. I hope this been good information for everybody. I hope everybody got something out of this. If you didn't get anything, you should have got something. Yeah, we thought about. I've been tossing around placement services and so forth. Yeah, there's a whole thing on there. Ice cream machine always out of order. Yep. Good afternoon, multimillionaires, man. Look, we need to stop talking about millions and getting to billions. And the only way we're gonna do that is we gotta make our money and make our money and make our money work for us. If we're not doing that, and if we're not talking about that, I don't know what we're doing, right? Yep, that's right, Tammy. Make sure you hit the like button, share this stream, send it out to other people, share all our other videos, right? If you're not familiar where those videos are located, you know what? I'm here to help you. So if you go to youtube.com/women in Linux, right? And if you hit playlist, you can get the playlist on How We Linux 10 minutes ago, hunting for jobs, tech stocks and jobs. Um, I really like this. I really want to do I should have did a AMA last night. I just didn't because I was doing stuff for us. But man, let's get into our making our money work for us. The time is now, and you're gonna see at 2 o'clock. Come back in an hour. Look, we come back at 2 o'clock. You're gonna really see an eye-opening information that's gonna really change your lives. You know, the time for to talking about millionaires. We're done with that. We need to move on to billions. And I have a couple of friends of mine that we've been talking about this for 2 years. Like we tired of hearing about six-figure salaries. We don't care about millions. We need to be in the billion range, and let's talk about billions. Let's talk about making those billions, right? Even if we do it as a group, I would rather do it as a group where it's a group of us in an index fund or a private equity fund, and it's worth $1 billion, and we sitting there, we can leverage and do whatever we want to, right? Didn't Dia tell you, and I'm getting all off subject. I was looking, we were driving, and I was like, man, that's 94 acres. Let's get it. What can we put on these 94 acres? What is it zoned for? How do we do that? What can we build, right? You know, people building subdivisions. You're never against, when you have places like a BlackRock or whatever, and they're buying whole subdivisions and renting them out at $1,600 a house, depending on the house on an average, right? So if you're buying a whole subdivision, say you got 50 homes in there, and people just coming in, they just want to rent, or they may be using them for vacation rentals, right? So you think about the money that's residually making, right? And that's what we want to be at. That's what we're trying to get to. Hope this information has been good for you. I see you at the 2 o'clock show. Remember, How We Linux at 2 o'clock. Bring your pen, papers, notes, your children. Bring everyone, even your elders. It's going to be a lot of information. See you there.